Hey, everybody. Welcome to this episode of our financial aid series, where we talk about ways to make college more affordable and easier on your wallet. We talk about things like financial aid, scholarships, loans, tax credits, and more, all so you can send your kids to great colleges without experiencing the financial stress for yourself or for them. So, if paying for college is in your future, stay tuned right here for money saving tips you're not going to get from Google, from high school counselors, and unfortunately not from colleges themselves. In case we haven't met, my name is Roman Polnar. I'm a financial aid expert and your host for these financial aid series. And today, I want to talk about how to handle distributions from a 529 account during a down market. Because let's face it, like paying for college at today's prices is hard enough. Like saving and paying all of these high expenses is difficult for families. But now, when you're adding the declines in the stock market, plus that we're all experiencing historically high inflation, college bound families are having an even bigger financial challenge than ever before. Paying for college is now even more difficult, right? Because if you consider that if a family's been able to save and invest for their kids' college using some of these college savings accounts, well, the values of those accounts might be down. And they might not have as much money to pay for college that they had just a few months ago. And whatever amount they were planning on paying from income might no longer be available because more of their income is now being used to pay for everyday living expenses. So we're hearing a lot of frustration and challenges from college bound families whose kids are about to start college in the fall because they're realizing they have less money to pay for it all than they just had a few months ago. So, what do you do if the value of your 529 college savings account is down? Do you cash it in? Do you let it recover? In this financial aid episode, this is exactly what we're going to talk about in more detail. So let's think this through. Technically, if you've been fortunate enough to put money away for your kids' college and you were using a very common tool called the 529 college savings account, well, you probably would have been invested in one of these age based investments, right? So if you started this plan when your kids are little, as they became older, uh, that age based 529 account is supposed to become more and more conservative the closer you get to them actually going to college. So if it was pretty conservative and you used one of these age based accounts, well, the value of your investments shouldn't be down too much. And you might still be able to pay for college in the way that you had planned. But one of the things that I've been seeing more in the last several years is that families were not using these age based options because, well, the stock market was doing so well for 10 plus years. And a lot of people ended up investing their kids' 529 money in a more aggressive way. So, if you're that family, what if you used a more aggressive investment, like let's just say a traditional, like S&P 500 like fund? Well, let's say you started off or you had $50,000 a few months ago. Well, that would have given you about $12,500 per year to pay for college for all 4 years. Well, if the value of that investment account is now down about 15%, which is roughly what the average value decline is in the market, well, then the value of your 529 is down to 42,500 from 50,000 that it was a few months earlier. So if your plan was to continue taking $12,500 per year to pay for college, then with this lower value, you'd only have a little over 3 years in that account. So what do, right? Do you just take the money, cash it in, and take the loss? Or do you let it recover? Let it sit there a bit longer. and use other money to pay for your kids' college. So I want to offer some ideas, right? Some food for thought, but I want to preface this with saying that this is highly personal, right? I don't know your situation. There are a lot of people listening and or watching this, and I don't know your personal situation. So don't take this as your personal advice, especially not investment advice, because I don't know your situation. And I recommend that you run this by a financial advisor. But I do want to give you some ideas because I'm seeing more and more people struggling to answer this question. Like, what do I do with this money? So, I want to give you a few different ideas, and this is going to be applicable most to those families whose kids are about to start college, or maybe they're already in college and they have 2 or 3 years left to pay. Um, I'm also going to give you some ideas if you've got younger kids for sure. But this would be an opportunity time for you, right? Because the value of investments is down. This would be a good time to consider putting more money to work, right? Because you're buying these investments on sale. Again, this is not investment advice. I'm not telling you to go in and start buying investments, but I am giving you some ideas to consider given the fact that we know that the value of the market is depressed, at least as it relates to where it was a few months ago. So, what do you do if you've got a high school, say, senior who's college bound and they're going to start school in the fall and the value of your investments are down? Well, one of the things you could consider is if you've got the means to pay for college in other ways, is to give it some more time. Let the money recover. If you've got savings, just use the cash. It You don't have to lock in a loss. Now, you might have other investments that may not have gone down in value as much. Well, consider using those to pay for college and let the 529 plan recover a little. I can't tell you when that's going to be. I don't know. That's when I recommend you talk to your financial advisor. I mean, you can always reach out to us and we can look at your, account and give you some friendly advice as well. But if you've got other means, you've got options. And consider leaving the 529 maybe for another 6 months or a year or 2 years. Let the market recover and let the value of your investments come back up to where they were. And so maybe instead of like example that I was using, instead of taking out $12,500 a year for 4 years, maybe you let the plan recover for a couple of years and then you use more of the account to pay for the next or the last 2 years of college, right? Or maybe you let it recover even more and you pay all of it or use all of it to pay for the final year of college. If you have options, you should consider them. Some families might also consider borrowing uh, in the first year just to let the value of these accounts recover. I'm not a fan of using loans to pay for college, but this might be an exception because, well, quite honestly, if the cost of the loan is less than the value or the decline of your account, then it just potentially would make sense. What do I mean by that? Well, let's consider that the average student loan is going to cost you between 6 to 7, maybe 7.5% right now. Well, if the value of your investments are down 15%, then it's just cheaper to borrow for a couple of years than it would be to cash in and lock in that 15% loss. So consider your options. Look at the numbers. I realize it's not the thing that most people really want to do, but it's worth looking at the numbers to make the right decision. And if you need some help, talk to a qualified financial advisor. If you don't have one, or if you're not sure if they're good at this kind of stuff, you can always reach out to us and we can help, but just give it some thought. Now, the other option is if you have younger kids, um, maybe you want to shift the account to them, right? It's easy to change a beneficiary in a 529 account, leave it to the younger kids, let the account recover, and then you could Pay for your older kids' college right now with other savings and other investments. Now, the other thing I want to mention is this: double check with your accountant or just Google and see if you qualify for something called the American Opportunity Tax Credit. It's a $2,500 tax credit available to families that qualify based upon their income. And if you have out of pocket expenses above a certain amount, which is about $4,000 a year, then you can qualify for that credit. But if you use 529 account to pay for college expenses, you can't get the credit. It has to be out of pocket expenses. So if you were planning on using the 529 plan and just pay for the first year of school entirely, this might be a good way for you to get a tax credit that you wouldn't have gotten otherwise. A lot of financial advisors would recommend, as a conventional best practices, is to just use up the 529 savings first. Pay all of the money that you can out of the 529 and then use other savings or pay out of income or then consider borrowing. Well, again, if the value of your 529 is down, and if you have other means to pay for school, whether it's out of other savings or out of your income, consider doing that, especially if you can qualify for this tax credit, because this way you're letting the investment account recover and you're going to get a potential $2,500 tax credit. It's like getting a $2,500 tax scholarship. It's free money. So consider using that. And then the fourth thing I want to offer for you to consider is that if you are going to borrow for college, or if your student is going to borrow for the first couple of years, you can actually use 529 plan to pay off up to $10,000 of debt. Now, it has to be student debt. You can't use a 529 plan to pay off a credit card bill, but you can use it to pay off a student loan. Now, there is a $10,000 limit, but if you are fortunate enough to have, enough substantial savings in a 529 account, but the value is down, maybe it's worth borrowing for this 1 year or this one upcoming semester to let the rest of the account recover. And then later you can use the up to $10,000 of your freshly recovered 529 account to pay off $10,000 of debt. A lot of families didn't realize that, or at least they don't know that you could use a 529 plan to pay off student loans, but you can. So consider that as an option. Now, again, this is not me telling you that you should, either sell your investments or let them recover. I don't know what the market's going to do, but I wanted to give you some ideas because more people are now coming to us and saying, "Well, gosh, what should I do? I've got this money in this 529 investment account, but the value's down. Do I lock in the loss or do I just let it recover?" So it's personal. I don't know what your situation is, but think this through. You have options. And this is a good time to get creative because doing that might end up helping you, save money on college. It's not necessarily a, scholarship that you're finding, but if it's free money that you wouldn't have had otherwise, consider all these options. Now, if you've got a younger student that isn't, about to pay for college and you've got some time, use this potentially to your advantage. Right? If the value of the market is down and you've got someone in middle school, this would be a great time to consider doubling down and investing. Now, I can't tell you whether you should invest today or if you wait 6 months, if the market's going to go up or down, but this is a really good time if you're a saver. If you're in the growth mode, this is, these pullbacks, these, downturns in the market, they're a gift, right? Because you can buy more of an investment with that later will grow in value because we know that the values are now in some way depressed. So don't necessarily become fearful just because the headlines are telling you to worry. This may be a great opportunity for you to multiply the savings, right, and get the most use of the money that you're able to set aside. But it's a challenge for anybody that's actually depending on this money right now. So I've shared those four ideas with you. If you've got any questions, you can always shoot us an email, or if you're on a social media platform, this is live streaming on multiple platforms. You can always put your questions and comments in the comment section below, and we'll get back to you. Or you can go to freemoneyfirst.com and you can submit your questions through that. You can also go on our website, which is www.pillar6college.com, and there's always going to be a way for you to reach out to me and ask me questions. But for now, I wanted to leave you with these ideas, right, as food for thought. So you don't have to necessarily, really worry more than you have to, and you feel like you've got options because you do have options. So whether you leave your investments to recover or you use them now and lock in some of a loss um, is up to you to think about. Um, Talk to an advisor. Talk to us if you don't have an advisor, or if you're not sure the advisor is well kind of educated in the college financial aid space, but you've got options. And so consider them. Reminder, look to see if you qualify for the American Opportunity Tax Credit. Again, a lot of people don't know that it exists. So if you qualify for it, do everything that you can to get it. It's free money. And if you can get it for all 4 years, hey, it's a $10,000 tax scholarship that the IRS is giving you. Take it. But just remember that money coming out of a 529 account doesn't count towards the credit. So you have to actually use your own money, whether it's from income or from other savings. But, anyways, I wish you all the best. I hope this has been helpful. And some of these ideas can help you make better decisions with your money so you can make it last longer and ultimately pay for college with more ease. Make it last and pay less out of pocket and out of income. So I'll talk to you all next week with another idea on how to pay for college. And until then, I wish you all the very best. Take care, and thanks for listening, and thanks for watching.